Hello everyone, and welcome to today's webinar on how to establish excellent business credit in 90 days. I'd like to take this opportunity to welcome you all. Thank you for coming. If you've ever attended a webinar with me in the past, you're going to note that this webinar, it will be very different than anything I've done before. Usually I spend about 20 or 30 minutes of the webinar going over whatever the topic of the webinar is. And then I spend about another 30 minutes going through the actual funding suite itself, our turnkey solution for business credit, because a lot of clients want to see that. But today we have way too much content to go over to be able to show you the funding suite. So everybody that's attending today, I will send you an email probably tomorrow with a link to where you can see the actual funding suite. You can see a turnkey solution for business credit, but we're not going to really be diving into that today. Today it's all content all hour long. We're going to walk through and give you a tremendous amount of details of what's involved in establishing excellent business credit quickly, to a point where when you're done with this webinar, you'll understand how to build business credit, what it takes, what the steps are, what you need to know. You'll know what you could use business credit for, the type of funding you could get. You will possess all the knowledge to be able to build business credit for yourself, even start the process of doing it for your clients, if that's what you're looking to do. So let's go ahead and get started, because like I said, we got a ton of content to jump into today. Okay, now, if you've been to one of my webinars before, a few of the first slides will look a little familiar. I always like to start with just an overview of what business credit is because, look, 90% of the population doesn't even really know what business credit is. So when I'm talking about business credit, what I'm talking about is getting credit in a business name. Okay, some people ask if this is business credit repair. It's not. There's no FCRA or FACTA laws in the business world, so there really isn't an official repair process for business credit. What we're talking about here is the actually building of business credit. So we're talking about credit that's built in the business name, and the business builds it so it has its own credit profile and its own credit score established. And once that business establishes a credit profile and score, the business can then start qualifying for actual credit. Now, the difference with business credit is this is credit in the business name. It's based on the business's ability to pay, not the business owners. Now, that's obviously beneficial to everybody here, especially people that are in credit repair, because since the business qualifies for the credit, then in a lot of cases, there's no personal credit check required from the business owner. It's one of the main benefits of business credit is that it can be built without a credit check. So a lot of people that even have personal challenges on the personal credit side, they could still come in and successfully build a business credit profile and score. Okay, now what business credit can be used for is, well, exactly the same thing consumer credit can be used for. I mean, most people don't realize this, but you could use business credit to do every single thing you could do with consumer credit, whether it's accounts like I'm listing here with, credit cards in normal stores, MasterCard, Visa, American Express. Business can qualify for credit lines, loans. The business really can even qualify for auto loans. The business can qualify for mortgages. I mean, just about every kind of financing or credit you can get on your consumer credit, you can also qualify with business credit. Okay, it's mind-blowing, really. A lot of people even in the credit industry don't know this because, well, let's talk about that. Let's be honest. Lenders don't want you to know this. These merchants, these creditors don't want you to know about this. If everybody knew you could go out and just easily get credit with no liability, well, then nobody would give liability anymore, right? There would be no personal guarantor. So these creditors are chugging along just fine. People are voluntarily giving their social. They're voluntarily personally guaranteeing their business debts. So it only benefits these kind of creditors, these kind of merchants. And that's the reason business credit's such a big secret. So few people really understand it, know about it, is because it's just not commonplace. You don't see that Staples or Lowe's or Sam's Club or Costco. You've never seen them advertise their business credit card. So because of that, people just don't know about it. Everybody goes in, gives that personal liability, and they win. Okay, but in reality, business credit, every bit can be done and used the same way consumer credit to basically accomplish the same thing. Now, there's a lot of benefits of building business credit. One is that a business credit profile can be built that's completely separate from the personal credit profile of the business owner. So what you're really talking about here is somebody having double the borrowing power, okay, because now they have a personal credit profile built, then they have a business credit profile built. Okay, another benefit is that business credit scores are based only on whether the business pays its bills on time. So a business owner could build credit much faster using business credit than consumer credit. I kind of wish consumer credit was this way. It's pretty common sense if you think about it. Do you pay your bills on time or not? If you do, you have good credit. If you pay your bills late, you don't have good credit. Depending on how late you pay your bills determines how bad your credit really is. I mean, it's so basic. It's just so easy. Instead of consumer credit that's based on all these 5 factors and different calculations where it's very tough for somebody to control, with business credit, it's ridiculously easy to get a good score. You just need accounts that report and pay them as agreed. That's it. You do that, you have an excellent score. And let's dive in, and we'll take a look about that in just a minute. I'll give you a little bit more insight. And also, when business credit's built correctly, you could do it with no credit check, and people could get approved with no personal guarantee and liability. This is it. These are the 2 reasons people build business credit. Half of the people build it because their personal credit's shot, and they need to get money, but they can't use their personal credit to get it. And the other part of the population gets business credit because they're done with the liability. They've put their own personal assets, their family's security on the line too many times. In a lot of cases, they got burned, and now they've learned they can't be personally liable for their business debts. Those are the 2 reasons 90% of people start building business credit right there. Now, jumping back to business credit scoring. When we're looking at personal credit scoring, as most of you know, there's 5 factors involved: payment history, utilization, length of credit, accumulation of new credit, credit mix. This is confusing. Okay, people can't control their length of credit history, the credit mix, their payment or the utilization. These things are hard to control. Okay, so because of that, it takes years of well-disciplined borrowing for a consumer to get a good personal score. But again, business credit scores only based on how they pay their bills. If they pay their bills on time, they have an 80 score. They pay it early, they have a 90 or 100 score. They pay it 4 months late, they have a 20 score. The score literally reflects how late they are. Now, I put Paydex score here because this isn't the case with all of them. Okay, Equifax, Experian, they kind of have their own variation of the credit score. But for the most part, what the credit score dictates is how late or how early or how on time is that person paying their bill. So it's real easy to build good business credit scores. All you need is to get accounts that report, and you just pay them as agreed. And if they do that, then you're instantly rewarded with an excellent score. So let's talk about what's involved with building business credit. Well, the first place to start has nothing to do with building business credit whatsoever. It's building a business credit profile, or it's building your base, making sure you have a credible foundation. So really, in business credit building, it pretty much starts the same as a consumer credit profile does. The business has no credit profile. The business goes and gets approved for new credit that reports to the reporting agencies. The business uses that credit and pays the bill timely, and then a positive credit count is established. Okay, pretty much the exact same as consumer credit, right? They have no credit, they go get credit, they pay their bill on time, they have good credit. Okay, and as the business continues using the credit, paying bills timely, it will qualify for more and more credit. Every single thing I just described here is exactly the same as consumer credit, no difference. Okay. But obviously the uses, those type of things of business credit are fundamentally, very different. And let's take a look at those steps. As I was saying, the first step in building business credit doesn't have actually anything to do with getting the credit at all. It's building a business credibly. It's building a strong business foundation. Okay, because the perception that lenders, vendors, creditors have is really critical to the ability for a business to build strong business credit. So before applying for business credit, a business has to ensure it meets or exceeds all these lenders' credibility standards. There's really over 20 credibility points that are necessary for a business to have a strong, credible foundation. Look, here's the reality. The reality is that you've probably talked to people that have tried to build business credit before. You might have even tried, and you failed. They failed. As a matter of fact, you won't talk to a lot of people that have tried to build business credit, but I guarantee you that the majority of people you talk to have tried and failed. Okay, it's different in the business world than consumer. In the consumer world, when you get turned down, they have to notify you why. They have to send you a letter. They have to tell you which credit bureau they used. I mean, they have to give you all this information that helps you figure out why you were denied. In the consumer world, in the business world, they don't have to tell you anything. They don't even need to tell you you were denied, let alone tell you why you were denied. So because of that, most people get kicked out right here. See, the reason we're going to go over this is because most people never even get approved. They lose out right here. They don't meet one of these lending credibility standards. They never know why they got denied. They got denied and they give up. They maybe try 2, 3, 4 sources. All sources turn them down. They say, I don't understand this business credit. I'm done. I give up. And then if you talk to them, they'll say, yeah, I tried to build business credit, but it didn't work. They made me give a personal guarantee. They made me. Well, it's because of a lot of these points. See, lenders are looking for very specific things. The problem is they don't tell you what they're looking for. So if you don't know what they're looking for, then they're just going to turn you down and you'll never know why. These 20 points are what they're looking for. Okay, and we're going to go over a lot of these now because if you meet this criteria, then you'll know before you even apply that you stand a very good chance of getting approved. First is a business name. It's ridiculously important that you use your exact business legal name. Your full business name should include any recorded DBA filings you'll use. Okay, I'm going to stop here because some people ask, can I build business credit for my DBA and my corporation? No, you can't. Your actual business name should include any DBA filings you have because they're going to look at your company including any DBAs. You can't build business credit for all your DBAs individually and your corporation. You have to build it for your corporation including any of your DBAs. And it's important to ensure that your business name's exactly the same on your corporation papers, licenses, and bank statements. Now, it's easy to look at this and blow it off and go, yep, Ty, meet that criteria. But do you? Does your bank statement say business owner incorporated or does it say business owner? Which does it say? Because there's a difference between, ABC Corporation and ABC Corporation LLC and ABC Corporation Inc. Those are all differences. So you have to make sure that everything you have, your corporation papers, your licensing, your bank statements, it needs to be the exact same business legal name. Corporate entities. Now, you can build business credit with any corporate entity type, and I get this question a lot. But if you truly want to separate business credit from personal credit, you have to have a separate legal entity, not a sole proprietor or partnership, okay? So unless you have a separate legal entity, a corporation or an LLC, for example, you might be doing business, but you're not truly a business. Look, this is accounting 101. For example, I've owned many businesses in my life, and I always filed S-Corps. I don't know why. A friend told me years ago to do it, and I did it. I never understood why. But what I didn't know was that an S-Corp makes me part of the business. The profits show on my tax returns. I am part of the business. So as long as I'm part of the business, I can never separate my liability. The business and I are one and the same. With an LLC or corporation, you are separate. Your corporation's in one place, you're in another place, the corporation pays its own taxes, the profits do not carry to your tax returns. You are separate from your actual entity. And it's the separation that makes eliminating the liability possible. See, if you're not part of the corporation, then you can separate your liability. But if you're part of the corporation, as you are in a sole proprietor or an S-Corp, you can never separate your liability. You are part of the corporation. So to build business credit effectively, you have to have a corporation or an LLC or something where you are not actually, or a C Corp, something where you are separate from the actual entity itself. It's the only true way to separate legal liability. Okay, so you got to be a corporation, LLC, in order to separate business from personal credit. EIN. Whether you have employees or not, you've got to have a federal tax ID number, an EIN number. You probably have a social security number, and your business has to have an EIN because in reality, your EIN to your business is the same thing as a social security number to you. I mean, it's something you have to have. Okay, so your tax ID is used to open your bank account, build your business credit profile, amongst do a lot of other things. And you have to take the time to verify that all agencies, banks, and trade credit references have your business listed with the same tax ID number. Again, something that's easy to look at and go, duh, I made this mistake right here. Owned two corporations. For some document, I looked at the wrong tax ID number and wrote it down. And then I went back to that document every time I needed to look at the tax ID number. So I got a year in and realized I was giving out the wrong tax ID number to a lot of different people. A very stupid mistake. But I made it. It was completely accidental, and I never thought anything about it until some point somebody brought it to my attention. Look, this can easily happen, especially if you own multiple corporations. So make sure your tax ID number is the same on all of the documents that you have. And you've got to get a tax ID number if you don't have one. Business credit, even in the beginning vendor accounts you can get, a lot of them will only look to see that you have an EIN and you're listed with 411. But they almost all will look to see if you have an EIN. So you have to have an EIN. I mean, this will exclude you from 99% of the business credit sources out there. If you don't, you need to have an EIN. Okay, the business address, something also that's important. It must be a real brick and mortar building with a real deliverable physical address. It can't be a home address. It can't be a P.O. box or a USPS address. And I get this all the time. Well, Ty, I'm using a UPS box. Nobody will ever know. Go to Maps and type in the address. You'll know immediately. You see a radar, a satellite image of the front of the building. You'll know it's a UPS store. Look, lenders have very basic technologically checks. Our funding suite has the same checks they have. They go through and see if you have a landline phone number and a real business address. If you're trying to use your home address or a P.O. box or USPS post office box or a UPS post office box, they're going to know it. And then once they know that where you work from home, you're either going to get denied or you're not going to get approved for nearly as much money as you would if you were a brick and mortar. Now, some lenders will approve you and fund and won't fund you at all unless this criteria is met. Some lenders will, okay? So you can get some credit without a physical address, but it won't be much and most sources won't approve you, okay? So you need to have a real business address. Now, there are solutions to do that, okay? And these are usually called virtual addresses. Locally, we have a company called Regus. Regus is nationwide, but we see quite a bit of advertising here local for Regus, R-E-G-U-S. Regus is the type of company that does virtual addresses. And they have solutions like address only, where they receive your mail and packages at their address. Okay, virtual office, where these are professional business address with a phone number, fax number, receptionist, and you can even use the office part-time. Okay, or a true office. You have a full office with these places with phone number, receptionist, fax, full furnishing, meeting rooms, and more. Okay, so what happens with these spaces is this. You're basically renting their address. It's really brilliant. And I did this because I wanted to have an office in the heart of Tampa, downtown Tampa. So anybody that looked at my office location said, wow, this guy's in a high-rise building in downtown Tampa. But what people didn't realize is that I just got my mail at that building. They then took my mail and forwarded it back to me. So I had an address I could use on applications for anything to show I was a big player because I had a big, massive office and a high-rise office in Tampa, Florida. But in reality, I just got my mail there, and they sent me my mail, but nobody would ever know that. That's what virtual addresses do for you. You could get your mail there. You could have a part-time office there. Okay, I've met people at some of these. They say, meet me at my office. And you go in, and it's a really nice office receptionist. You're like, wow, this guy's a big player, beautiful conference rooms. And in reality, the guy's just renting us a room there. Okay, you would never know that unless you understood what Regus and these kind of offices do. So if you don't have a physical address, you just need a virtual address. You need the appearance of a physical office to get approved, and it is very important. 411, just as important as EIN. I can't say this enough. Most sources will look at 411 and EIN, even if they look at nothing else. So you've got to have a dedicated phone number listed with 411, okay, because most people are going to see if you're listed there. A toll-free number will give your business credibility, but you really want to consider having a local business number for the listing with 411. This applies if you have a local number. Look, I mean, we all live in an environment now where businesses don't even have local phone numbers anymore. It's all toll-free. So if you only have a toll-free number, don't run out to get a local one to get 411. If you have a local, get it listed with 411. If you have a toll-free number, then list that with 411. What's important is that the number you're providing on these applications is provided or is listed in 411. And also lenders perceive an 800 number as a sign of business credibility. I mean, let's be realistic. You could get a toll-free number right now at places like Ring Central for less than $10 a month. Okay, so a lot of people have them, and that's why now lenders look at that and say if you don't have one, you're really not as credible as you should be, and unless you're a pizzeria that doesn't need a toll-free number, you might not get approved. Okay, so if you're a single owner with a home-based business even, it doesn't matter. You really need a toll-free number. It just gives the lenders the perception that you're a bigger company. And it's incredibly easy and inexpensive to set up a virtual local phone number or a toll-free number, so it's something you really want to consider doing. Right here is the main important point. It gives the perception that you're an even bigger company. Look, your goal and my goal is the same, right? We want you to get approved for the most amount of money you can get. In order to do that, you need to give the lender the perception that you're the biggest, most credible company on the planet. And what we're talking about today is how you could do this, even if you don't have a real business address or this or that. We're teaching you ways that you can do it so the lender has the perception that you're a big player and approves you for more money. Okay, so a phone number. A seller home phone number is your main business line will get your business flagged as an unestablished business that is too high of a risk. This word is something you never want to see. Flagged. Once you're flagged with the business credit reporting agencies, it's almost impossible to go back. I mean, you got a real uphill battle. So don't even try to use your cell phone on your application. Don't try to use your home phone. Like I said, in our funding suite, we have the same technology lenders have. You type in your phone number, we'll tell you if it's a cell. We'll tell you if it's a home. We'll tell you if it's land. We know right away. Okay, lenders are going to know, so don't even try. Okay, don't try to get away with it because then you get flagged by the bureaus and then you got a real problem on your hands. So don't give a personal cell phone or residential phone as a business phone number. You could forward those numbers to a cell or to a cell or landline. So if you go and get a virtual phone number, you could forward the number to your cell. So all the calls will still come to your cell, but you still have a virtual toll-free number to show the lender on the actual application. Also, lenders perceive a credible business as one with a fax number. Okay, you're going to have a fax to receive documents, to send in your credit applications. So you need to set up an e-fax. You can even set up an e-fax that goes directly to an email. Don't care how you do it, you need a fax number. Nowadays, through places like Ring Central, man, it sounds like I'm pushing Ring Central, but I guess I use them so much that they're just who I think about when I think about phone services. But through companies like Ring Central, you can get a number, a toll-free number, and a fax number all in one, all for less than $10 a month. So if you don't have them, it's real easy to get a phone number that could be your fax number, also is your phone number and your toll-free number all in one shot. But whatever you do, you need a fax number. Every application is going to ask for one. You need to input information on that blank. Websites. Credit providers will research your company on the internet. Okay, it is best if they learn everything directly from your company website. Not having a company website will severely hurt your chances of getting business credit. I say severely hurt, but I should say nearly eliminate. Because if you don't have a website, you're not going to get money. It's just as simple as it is. Nowadays, you're not even a real business if you don't have a website from a lender's perspective, so you really need to do it. And there's a lot of places online that offer affordable websites so you can have an internet presence. This is so ridiculously cheap and easy to get a website up nowadays. First of all, what I did, which is the greatest lesson I've ever learned in my entire business career, is how to put up websites. It took me some time, but once I learned that, I can't tell you how much value that gave me because I was able to put things up online and take them down very quickly. You could easily go. There's a lot of free resources out there to learn how to put up your own website. You could even go to places like odesk.com, freelancer.com, and get freelancers to put up your website for you. And you can go to places, type in free website template. You could even go to a place like templatemonster.com or just type in, I want website templates. And nowadays, you can get website templates for $30, $80. You could get the website put up for $50 to $100. So if you don't have a website, for every bit of $100 to $150, you could have a website put up. Okay, it's not difficult to do. It's not expensive to do, but it goes so far from a lending perspective. So you really should have a website up, and you really want to put everything you want a lender to know on there. Any kind of guarantee you offer, how credible you are. Your website in this case is as much about giving the client information or consumers or prospects as it is for lenders seeing what you want them to see. right here, this is why I love the internet, because people don't get it, but you can completely control what people see about you. Okay, through article spinning, through press releases, through SEO on your website, you can control when they type in your name in Google what they see. And people don't know that, which blows me away. This is the same thing with lending. I can tell you I'm an expert on this through merchant accounts. Okay, you want to put on the website what you want them to see. You don't want them to go digging around for information about your company. You want them to hit your website and think they've hit the information gold mine, because everything they could possibly want to know about you is there, and it's all reflects your company in such a brilliant light. And that's what you want. Control the flow of information. They're going to go looking for it. So put what you need on your website and give them what they're looking for so they don't need to go look elsewhere. Okay, it's also important to get a company email address for your business. It's not only professional, but it helps your chances of getting a thumbs up from a lender. And you want to set up a business email address because it's easy and inexpensive to do, and it's just too easy to neglect. Okay, so avoid using free services like Yahoo and Hotmail. And I got sucked into this because Hotmail's or Gmail's easy. It's so easy to go to Google and set up a new email address. And once I figured that out, it's like, it's too easy to do. But there's nothing worse than credit providers seating an email address like partychick2009 at yahoo.com on the application, right? Okay, I mean, right away, you're going to see this, and as a lender, you're going to be skeptical about the credibility of the business just because they have some kind of email address like that, or they don't even have a professional business email address. So the email address should be at yourcompany.com. So an example is support at yourcompany.com, John Smith at yourcompany.com. My email address is Ty at disputesweet.com. Of course, I have personal emails. I have like a lot of emails, but I never would use those on an application. I would always use my professional business email address. That's what you really should be doing. Your business banking history is vital to your future success. I love this. I love this slide. You're about ready to see why you never waste your money on buying shell corporations. Okay, but the date you open your business bank account is the day that most lenders consider your business to have started. So if you incorporated your business 10 years ago, but you just opened the business bank account yesterday, then from a business perspective, a lot of business lenders and credit providers will see that your business just started yesterday because your bank statement just started yesterday. So the longer your business banking history is, the better your borrowing potential is. Look, this right here is one of the ways they safeguard against shelf corps. If you've ever heard of a shelf corp, it's a bogus scam. What people do is they set up corporations. They do nothing with the corporation. Then they sell it back to you and say, well, this corporation has been open sitting on a shelf for 2 years. Now you could use this corporation showing you've been open for 2 years and get all kinds of money. Well, that's brilliant, but here's the problem. They're going to look at the bank statement, see you just opened a bank account a month ago, and that's what they're going to look off of, not the date you opened the corporation. Look, a lot of people, I'm way guilty of this. A lot of people like me think of an idea for a business, and I go in and buy the corporation, okay, because it's $60 in Florida. I don't care. I like the idea. I find a name. I'll go buy the corporation, okay, and then I have a corporation. And I won't do anything with it. It might sit there for years and years. I own a real estate corporation that I've never done anything with, for example. Okay, so if I'm going to get money, I could show I've owned a real estate corporation for now 8 years. I've owned this corporation, but I've never done anything with it. Now, if I decided to do something with that corporation, what would I do? I'd open up a bank account, right? Because if I want to accept money and I want to pay bills, I need a bank account. So that's the first thing I'm going to do when I actually start using that corporation. That's why lenders look at it that way. Shelf corps, people like me that buy corporations and do nothing with them for years. That's the reason that a lot of lenders will look at the bank statement to determine when you open your business, not when you actually open the corporation. So if you don't have a business bank account open, go open it right now. That way you have some longevity, because that's what they're going to want to see. Licensing. One of the most common mistakes in building business credit is that the company has non-matching business addresses on the licenses. We talked about the addresses already in this. Even worse is not having the required licenses for your type of business to operate legally. So you need to contact the state, county, city government officials to see if there's any required licenses and permits to operate your business. Imagine being a contractor. You go apply for credit. You're getting turned down. You don't know why. And the reason why is because you don't have your contractor's license. Okay, the lender doesn't tell you that, nor would you ever know. But if they're going to look at this and go, what are you doing, man? You're not even running a legitimate business. You need to have a contractor license. You don't even have a contractor license, and now you want us to lend you money when you're not even doing business legitimately. They will look at this. So have your required licenses, or you're going to get turned down. It's just the way that it is. Okay, state business filings need listed correctly. County licenses, permit filings listed correctly. City licenses, permit filings are listed correctly. IRS filings listed correctly. Okay, all of that is important. So take the time also to verify that the main agencies, state, IRS, bank, 411, have the business listed the exact same way and with the exact same business legal name. Would you believe that if they see a different name on your application than what they see in 411, you get denied? You will. You get turned down. Imagine that. Imagine getting turned down because your application says ABC Incorporated and your 411 says ABC, period, company. Okay, and that little difference, you don't know it, costs you getting approved. Now, everybody denies you and you never know why, and it was because of this little basic thing that all of your licensing had incorporated on the back and your application didn't. That's what happens. So that's why you've got to make sure that this stuff has the exact same legal name. Look, is it a nuisance? Of course. Going back at your licensing and your IRS, it's a little bit of a nuisance. But first of all, you really should make sure the stuff's done correctly anyways. And secondly, the brilliance of everything I've told you and taught you so far is that you only do it once. You never need to do it again. And your entire business lifetime, you don't need to do it again. You only need to do these things once. Once your business is set up credibly, well, then you're good to go moving forward. So take the time to do it, because once you do this once, then you'll know your chances of getting money in the future will be significantly better. So take the time also to ensure every bill you get, phone bill, electric bill, has the business name listed correctly and comes to the same business address. Okay, business credit reports. Business credit reports are offered by 3 agencies, Experian, Dun & Bradstreet, and Equifax. Yeah, there are other players like LexisNexis, i.e. TransUnion, okay, that you'll see, but they're not big players. The big players are Experian, D&B, and Equifax. And the first thing you want to do to start building your business credit is get a copy of your reports. So let's talk about what we've done here so far. What we've basically done is made sure your business was set up credibly. Okay, so if you followed the steps so far, now you make sure you're going to meet the lending criteria before you even apply. The next step is now you want to get into the actual business credit reports. You need to see, do you have credit now that you don't know of? So you got to get access to those reports initially. Now you can go to Experian and go to smartbusinessreports.com for Experian to get a copy of your Smart Business Report. It's about $49 to $99 a month for Smart Business Reports. You can find out how many trade lines you have, see if you have a business credit score, if you have an Experian business profile, check on recent inquiries, all from your Experian Smart Business Report. Let me add that when you're using our system, where it's a turnkey system, you just sell to clients to build business credit, the client gets this for free. It's actually the only system in the world that Experian gives this information out for free. So where somebody's normally going to spend $50 to $100, $600 to $1,200 a year just to monitor their credit, with our system, they pay nothing. It's free. But if they're not using our system to build business credit, you've got to make sure they start doing it by contacting smartbusinessreports.com, getting set up with Experian. Equifax. You can purchase a copy of the Equifax report at equifax.com/small business. Okay, if you go there, it'll get you the Equifax report. They take longer time to report. They are a minute player in the business world. In the business world, D&B, Dun & Bradstreet's the biggest. Experian is a very distant second, and Equifax is almost a non-existent. But they're just not big players, and it does take them longer to report. And that's why if you do find credit providers that report to Equifax, you really want to try to get approved for them, because it does take longer. They charge about $100 for a full report. Again, you can go to Equifax.com small business to get a copy of that report. A DUNS number is the first thing you need with Dun & Bradstreet. Your DUNS number will also play an important role in enabling your business to borrow without a personal guarantor. Look, when you want to get money for a business, they need a DUNS number. It's the first thing they ask you for. So you've got to go to www.dnb.com. DNB is short for Dun & Bradstreet. And it's $2.99 to $6.99 per DUNS number and activation. Here's how it works with Dun & Bradstreet. If you and your clients are using our turnkey solution to offer business credit, it's all free. It costs you nothing. If you are not using us and they're going to Dun & Bradstreet directly, I need to give you a warning. Dun & Bradstreet will sell you. They will sell you. They will charge you for picking up the phone. They will charge you for talking to you. Okay, that's an exaggeration, but they pretty much will charge you for just about everything else. So if you call Dun & Bradstreet, you ask them for a DUNS number, and you tell them you're trying to build business credit, that's how much it's going to be. On their website, it's about $2.99. If you call them, they're going to quote you a package of about $6.99, and they will try to sell you. So know that. If you go to DNB and just even look into their monitoring, they're going to solicit you. They're going to try to make this $300 to $700 sale, just so you and your clients are aware. Okay, now you can enroll with DNB's credit monitoring also. It's about $39 to $99 a month if you want that, and you activate your DUNS number and get your credit profile and DB rating. That's part of what they're going to charge you for. The $2.99, we've seen that as much as $900 when you're talking about the DUNS number, the monitoring, and activating your credit profile all together. What do I mean by activating your credit profile? I mean an excuse for DNB to charge you a bunch of money. Literally, that's what I mean. In reality, when your first vendor accounts report to DNB, your profile will be active, but DNB won't tell you that. They'll try to make a sale. They'll try to sell you this $800-900 package, so they will charge you for that actual activation. Okay, so now you have access to your business credit report so you can track what's going on. So next step is you've got to start building the business credit report. Now, as we talked about before, it's really the same steps as building a consumer report. The business gets approved for small credit cards to help them build initial credit. These types of credit are usually called vendor accounts in the business credit world. In the consumer world, it's mostly secured, right? People start with small credit cards, mostly secured credit cards, and they build up from there. In the business world, these aren't secured accounts. These are net 30 accounts, which means they're not revolving. They want paid back in the course of 30 days, and they're known as vendor accounts, which these are initially vendors that will give you your initial business credit sources. Now, a vendor line of credit is usually net 30, which means the lender has to be paid back in entirety in 15, 30, 60, 90 days. A lot of them are net 30 accounts, which means they need to be paid back in 30 days. Okay, that means you can purchase a product and pay it back in that period of time. So if you buy $300 worth of stuff on a net 30 account, then in less than 30 days, you've got to pay back that $300 in its entirety. Obviously different than revolving. In revolving, if you bought $300 worth of stuff, you might have a monthly payment of $15, and you could pay this back over time. But with net 30, you've got to pay that full back in its entirety, and that's how most of these vendor accounts are set up. Now, you can get products and services for what you need for your business and defer the payment on those terms for 30 days, okay? So vendor accounts help you not just by building business credit, but also by easing cash flow. Let me give you an example. In the credit repair industry, I used a lot of paper. And I bought that paper from Staples. Well, I could go get a net 30 account through Staples, buy my paper, and not have to pay that back for 30 days. So that just helps ease up cash flow. So vendor accounts do provide that benefit. And then a lot of vendor accounts will approve your company for net 30 or payment terms upon verification of as little as an EIN and 411. I'm bringing that up again, aren't I? Okay, it's important. You know, a lot of these vendors will only look at EIN and 411 to start. So you got to make sure those things are perfect, definitely. Make sure you're listed with 411. Make sure you have the EIN number. It's all consistent, your name, your address, because that's what they look at. And a lot of vendor accounts will approve you if you just have those things. Okay, now always you want to apply first without using your social. Now, some vendors are going to request it. Some will demand it, okay? They'll tell you they have to have it. They won't submit the application without it, okay? But when you first report or when you first apply, still apply first without it. And when your first net 30 accounts report as a trade line, then your DUNS number will automatically and your profile will actually be active in your file if it isn't already. It's also the same for Experian and Equifax. Okay, look, here's the deal. they're all going to not give you an active credit profile until you have active credit. Kind of common sense, I guess. The only difference is Dun & Bradstreet will try to convince you that you must pay for that activation when you really don't. And the reason they do that is because a lot of people use the DUNS number just for contracting. So for example, if you are a contractor and you want to do business with the U.S. government or the United Nations, you have to have a DUNS number. That has nothing to do with building business credit. You just have to have a DUNS number so they can identify you. Because the DUNS number is like the EIN of the world. It's a worldwide identifier for your business, okay? So if you just go to get a contracting job, you have to have a DUNS number. So because of this, Dun & Bradstreet can't charge for the DUNS number. So what they've done is find a very sneaky, creative way to charge you for the DUNS number. They package it with what they call an activation, and they tell you you must pay for the activation and the DUNS number together. But in reality, you don't need to pay for it. In reality, your profile will be active when your first vendor accounts report. But I promise you, if you call Dun & Bradstreet, they will tell you I'm a liar. They will tell you up and down you have to pay for it. They will tell you everything they need to tell you to try to convince you you need to pay for it. But in reality, you don't. When your first vendor accounts report, it's automatically set up. It doesn't cost you. So you need to have a total of at least 5 of these vendor 30-day accounts reporting to go to the next step in business credit building. Now, some vendors require an initial prepaid order before they can approve you for business for terms. Okay, and an example of that is Uline. Uline does shipping supplies, and sometimes they make you place an order or two before they'll give you net 30 terms. Okay, but your vendors do not necessarily have to serve 100% of your business needs. Just some tips I'm throwing in here. Vendor accounts aren't easy to find. It's one of the most difficult aspects of building business credits. People don't know where to go to get vendor accounts. Okay, so because of that, you might need to use people like Uline for shipping supplies. You wouldn't normally use them, but you might be forced to use them because there's not a lot of big selection of companies out there. Obviously, remember to pay these in full and on time. Remember, the business credit scores are based only on how you pay on time or not, so you want to pay on time. And you want to be patient. Allow time for these vendors' reporting cycles to get into the systems. Okay, they'll actually tell you that it takes up to 3 cycles, up to 90 days for the accounts to report, but that's not true. It really could be done in as little as 30 to 60 days. You could really see these accounts report in as little as 30 to 60 days. Give it as much 90 days for them to hit your business credit report. Let me take a look at a few of these sources. Radio Shack, they have a great vendor account. I'm not going to, the first part of this is what they sell. You know that. They report to D&B and Experian. They will pull a business report to see how you paid the bills. If there's not a lot of data, then they're going to ask you for bank or trade references. You must be in business at least 2 years with them. A D&B number is required, and credit references, and a payment term of net 30 is what they offer. You can contact Radio Shack for info on that account. Another one is Lockwood and Associates, maybe one you want to write down. But they deal with all kind of corporation stuff, incorporating, corporate resolutions, minutes, all those type of things. They'll approve almost any business with 411 and EIN, and that's why I list them here. Look, you look at Radio Shack, they need 2 years in business. Well, if you're not in business with 2 years, well, a company like Lockwood and Associates can get you approved even as a brand new business. You just need a bank account, 411 and EIN. You have those things, you get approved. Okay, they report to Experian. It takes about 30 to 60 days for the trade line to show, and they offer low monthly payments on their service. So they sell you their service, you break it down into payments, and they report the payments to the Business Credit Reporting Agency. So a couple great ones to check out. Okay, I don't have time today. I'm not even going to have enough time to go through this whole presentation for what I'm seeing here. So I definitely don't have time to go through 20 different vendors and list them for you. You're going to have to do some research. You're going to have to do a little research and say, hey, who reports to the Business Credit Reporting Agencies, vendors, starting vendors. You're going to have to do some research to find yours. Of course, if you're using our business credit building system, our funding suite, they're all in there. We've got more, merchant sources or more revolving and net 30 sources than any other company in the world. So we've got like 50 choices for you to choose from, 50. And you need 5. So it's real easy to get approved through our system because we have them all there. But if you don't and you're not buying into our system, that's fine. You don't have to. You just got to do a little bit of legwork, a little bit of research. And know this is where it's going to take you a little bit of time. The work with building business credit is getting your business set up credibly, the stuff we initially talked about, and getting these initial 5 vendor accounts. That's the work. It's okay. Just be prepared knowing that that's the work, knowing you're going to have to do some research and legwork. And as long as you know that, then no surprises. Okay, so the next step is once you have the 5 accounts, then you're going to start getting approved for revolving credit cards. And revolving credit cards, of course, are accounts that allow you to pay a minimum payment due, not the full outstanding balance. And these accounts normally report to Experian, D&B, and sometimes Equifax. Because of how they report, they help you get more business credit than just net 30 accounts. This is like secured credit cards. Look, secured credit cards have a code on the consumer file, so lenders know they're secured. Even though you might look at your report and not know, a lender knows. So if you only had secured credit cards, you're never going to get high limit credit cards. But if you got secured credit cards, then you got regular credit cards, then those regular credit cards will help you get higher limit credit cards. Exactly the same in the business world. They know vendor accounts. So you can't just build business credit with vendor accounts only, nor would you want to, right? You don't want net 30 accounts, you want revolving accounts. That's why you add revolving accounts. Revolving accounts the next layer of what you need to add to start getting yourself to Visa, MasterCard. Okay, most merchants and major retailers do offer them, although they don't advertise them. Remember, as we talked about before, there's no benefit for a merchant to promote that they'll give you credit with no liability when you're willing to sign on the dotted line and give the liability. So most of them don't advertise it even when they have it. And they don't promote that you can get it and regularly ask you for your social security number. But most of them do. Walmart, Costco, Sam's Club, BP, Chevron. Staples, Lowe's, Home Depot. All these companies offer business credit even though they don't promote it. Okay, some revolving credit cards are Staples. They report to D&B and Experian. They'll verify 411 and EIN. They'll verify 411 with you on hold. And they'll check that your business credit profiles are set up with D&B and Experian. They also check to make sure your name and address matches 411. Dell's a real big account for business credit building. They report to D&B. They'll approve you for as much as 10 grand if you have a 75 paydex. Now remember, at this point you have a 75 paydex, right? You got 5 accounts, you paid them as agreed, your paydex should be 80 or higher. So then you have trade lines, which makes it easier to get approved for these kind of accounts like Dell. And you want to be in business at least 6 months with them. And sometimes they will check your actual personal credit. And they do offer payment terms of revolving. Okay, so now you just continue applying. You built a strong credit profile. Okay, you made sure your business was set up credibly. So then you went in and got 5 vendor accounts. Now you added at least another 5 revolving accounts. Now you have a total of 10 accounts. You want to ensure that you're getting approved for at least one account with a $10,000 high credit limit. Okay. With 10 reported accounts and a $10,000 high limit, you can then continue building your business credit. That's it, 10 and 10. If you have 10 accounts and one of them has a $10,000 limit, now you move on. Now you move to Visa, MasterCard. Now you move on to high-end credit lines, credit cards. That's your goal. That's where you want to get to. To get there, you need the 5 vendor, at least 5 revolving. If you got that, then you should have one of a high limit of 10,000, and now just continue on. Remember, with business credit, this isn't a matter of getting a vendor account, paying on it, and then not doing anything else. Most of these accounts you need to be using on a regular basis, but you don't need to be using a lot of money. If you got a Staples account for 5 grand, you don't need to spend 5 grand with Staples. Just spend $5, spend $10, spend $100, spend some money. It's not the money you're spending that matters. What matters is that you're using the account and paying the bill every month. You with me? So make sure you do that. Get your 10 accounts. Use your 10 accounts on a regular basis. Make sure you're paying them back as agreed. Okay, so then that way you can then continue on getting Visa, MasterCard. Okay, so I'm going to move on and I'm going to fly through the next 10 minutes because this is a whole nother webinar in itself. But now that you've built business credit, look, let's get to what's important. What would you want to use it for? Well, first is, like I said, revolving accounts. We already talked about all this. I'm going to slam past that slide. Credit lines. You can also use business credit to get credit lines of 50 to 150 grand based on the business credit with limited income, even no income documentation. If your business wants to show actual income docs, you can get as much as 250 grand in your business name, and these come with check writing capability and are linked to debit cards. Okay, over 80% of the U.S. population uses equipment financing to get equipment. Never knew that. Okay, you could definitely use it using business credit. It can also be used for office equipment or large commercial equipment used for manufacturing. Obviously, most of you on the call would know you could benefit from getting money for equipment. Okay, and that means you could borrow against equipment you have, and you can also get leasing to buy new equipment. You could definitely do that with your business credit bill. And this also works for a brand new startup business. So even if you're a newer business, if you've got your business credit built, you could use that. You can also get heavy equipment financing, loans up to $20 million. Challenge personal credit's okay with these kind of loans. But I'm not going to spend a lot of time there because most people on this call, you don't have construction equipment, farming, paving, trailers, mining equipment. Okay, but heavy equipment financing is available using business credit. Securities-based lending. Okay, it's a revolving line of credit issued against securities such as stocks with interest rates as low as 1.6% and loan to values as high as 90% of the security value. Limited income docs is required. Most major stocks qualify with business credit built. It's the kind of funding that becomes available. You can also get auto vehicle leasing. You can get multiple vehicles, and it can be in the business name using the business credit once it's built. Merchant advances, where you could borrow against future credit card sales. Okay, you could can be secure with challenge personal credit. Big deal. So now, most credit repair companies accept credit cards, for example. I did. So I was qualified for a merchant advance, even with challenged personal credit. Okay, not me personally, but you can secure these with challenged personal credit. And loans can pass in current credit card history to determine financing amount. So what they're going to do is they'll look at your credit card history. If your credit card history is good, you've got decent business credit built, you can get these kind of loans fairly easy. Small portion of each future credit card sales goes towards the actual repayment. Revenue lending is pretty similar, but instead of looking at your credit card sales, they look at your revenue, okay, and then you can typically get money up to 25% of your annual revenue. And one big benefit is that it provides a variable payment. Same with merchant advance. They take a portion of your future credit cards or revenue. So what that means is it means if your future revenue or credit card sales is low in a month, so is your repayment term, which is nice. Inventory financing is a bank line of credit secured by a company's inventory. Okay, so with inventory financing, a borrower can borrow against or purchase new inventory, and that inventory is then used as collateral to get financing. Much easier to obtain with business credit built. AR factoring and purchase order financing, where you could borrow against outstanding account receivables and purchase orders. You could actually get up to 90% within 24 hours or 80% of purchase orders, up to 95% of receivables forwarded to you in 24 hours. There's no background checks. The lender handles the collections, and it's not even a loan, which makes it nice. You can get financing to wrap a vehicle. Get approved in 72 hours. So you can get up to 50 grand to put these kind of commercial wraps on vehicles. Very popular. You don't even need to finance them. If you got business credit built, you can qualify for these kind of financing. You can even qualify for commercial real estate up to $20 million. They do owner-occupied, conventional investment, hard money, bridge loans. Can be used for industrial, office manufacturing, even assisted living facilities. You can even get rehab financing. So if you want to buy and flip properties, you can get up to 65% of repaired value over a 6 months term to basically flip a property, to rehab a property, to fix up a property that needs repaired for the purpose of selling it. You can get SBA loans up to $12 million. Okay, there are micro loans where there's even smaller versions of these available. They do require income documentation for those kind of loans. But again, with business credit leading the way, it's definitely possible.